There we go. What's going on, family? What's going on, family? What's going on? What is up? Shout out to every single one of y'all that's in the building with us tonight, family. Let me know if you guys can hear me now. I mean, you guys should be able to hear me now. But what's going on, family? Great to see you guys all tonight. Go ahead and drop those locations in the chat because we do got a lot to talk about. We don't got too much to talk about today, but we do have a lot of important things to actually talk about today. You know, because we did have some major news releases that happened throughout the day today. We're going to definitely talk about those and also look at how the market reacted to that data. And I'm going to give you guys my opinions as to why I believe the market is doing what it is doing and how the market is actually just setting itself up for the major sell-off that, in my opinion, is actually going to happen for, you know, the indices and things like that, guys. So we're going to have another great session today, another phenomenal stream, a lot to freaking talk about. But I'm excited to actually be here with every single one of y'all tonight. All right, so let's see who we got in the building. We got Louisiana in the check-in. What is going on? We got Riverside, California. We got Phoenix in the building. We got my guy Tony. What's going on, Tony? Good to see you. We got Chicago in the house. Buena Vista, Colorado. We got Baltimore, Maryland in the building. Colombo, Sri Lanka. What is up? What is up? What is up? Shout out to you guys that are all tuning in, that are all rocking with me tonight. We got Yonkers, New York in the house. We got my brother O in the building out there in Philly. Shout out to my guy Kyle. I see you, bro. Right? Shout out to you guys out there in Vermont. I appreciate y'all. Chicago in the building today. So let's go ahead and just get into what we want to talk about, family. All right, continue dropping those locations, though, as you guys are continuously tuning in. We got Uganda in the building. We got Orange County, Connecticut. Shout out to every single one of y'all. Right, but let's go ahead and really look at what, you know, we actually pretty much had to deal with today, guys, in terms of news, in terms of data. You know, because we did have a lot, right? We had core durable goods. We had retail inventories. We had crude oil inventories. We had retail. Oh, that's for the ruble. But we had FOMC. We had the federal interest rate decision, right? We had the press conference that followed. We had a lot of data that actually came out today. Now, the most important one, in my opinion, is definitely going to be this one right here, guys, right? The FOMC statement, the federal interest rate decision, and probably more importantly, it's probably going to be the press conference, you know, that actually followed the actual interest rate decision as a whole. Because those press conferences, guys, you know, when Jerome Powell is speaking, you know, he's giving a lot of insight from his perspective, right? From, you know, his team's perspective on what could be the best approach moving forward for these markets or for the economy as a whole. So our job as traders and investors is to try to pick as much of that information from that he's giving us so that we can really try to identify what the sentiment in the market overall is going to be following the actual release of the interest rates, right? So overall, they spoke about a lot of things, right? One of the topics that was definitely going viral right now is the fact that they're trying to redefine the word recession, right? Because we all know, and if you don't know, family, because you're newer, welcome to the family. First things first. Second thing, a textbook definition of a recession is pretty much 2 quarters back to back of seeing negative growth occurring in an economy, right? But now, the Federal Reserve, they're pretty much trying to redefine it, right? They're like, nope, that's not what a recession really is no more. We can't go by that no more, right? Overall, guys, I truly believe we've been in a recession since the start of this month. We figure out tomorrow, right? Tomorrow, the actual real numbers do come out early in the morning, 8:30 a.m. And yeah, if we have negative growth, if we had negative growth over the previous quarter too, then we are in a textbook recession. Now, a few reasons why, Jerome Powell and his team is trying to like downplay it, or the reason why they probably don't believe, that we're in a recession or that it won't classify this time around, is because we still do have a very strong jobs market, right? A labor market overall. And he's pretty much betting on the labor market, at least one of a few things that he's betting on to pretty much get us out of any sticky situations, right? And one thing that Jerome Powell also said, guys, that he's very comfortable with doing is in the future to actually start easing, right? To actually start allowing, interest rates to eventually start to turn around, right? He literally just mentioned it today, right? That in the future, right? Literally what he said, in the future, they're actually going to be looking to, pretty much turn around and to start lowering interest rates once again. Okay, so again, that's what they're saying, right? That's what Jerome Powell and his team is saying, right? It's very interesting to see exactly what's going to happen though overall, guys. But it was a very interesting news release. They did actually end up raising rates by 75 basis points, right, or 0.75%, going from 1.75 all the way up to 2.5. Now, this itself, guys, was already pretty much guaranteed a 75 basis point hike. What was on the table was not just that, though, was also more so a, full 1%, right, or 100 basis point rate hike was also on the table, right, which for now they said that, nope, they're going to stick with the, the 0.75% for now. And again, they're even talking about possibly turning around and pretty much doing a U-turn sometime in the future already. Now, because of that type of data, guys, right, because of the way that Jerome Powell was talking, him being very, very passive, right? Him saying, no, there's nothing to worry about, right? A recession is this, a recession is that. We're going to rename what a recession is. We have strong jobs market, this and that. And when he also pretty much just reiterated to the fact that he has no problem turning on the printer again, right? The money printer that the Federal Reserve has, right? I believe that's why the markets pretty much did start to react in a very bullish manner, right? Right now, guys, we're looking at, the indice market, right? The S&P 500. And we've seen the S&P 500. I mean, literally, look at this, right? Right at 230. Once he started to open his mouth, this thing really started to gain a lot of strength, right? So the markets as a whole, guys, really liked what Jerome Powell was saying, right? In terms of, in my opinion, the key part of that whole thing that he talked about was the fact that he said he's very open, to pretty much doing a U-turn if needed, right? Because that's one way that they could, try to go ahead and it's not going to help with inflation per se, trying to do a U-turn and lowering interest rates, right? But it will help us get out of a recession quicker, all right? It will help the recession aspect of this whole thing. Man, these are good, right? But I hope that makes sense, family, right? Jerome Powell and the team over here in the Federal Reserve, they have a very tough job right now, right? They're trying to figure out, if they want to continue going all in with inflation, or if they're now trying to be, more cautious about, this whole recession that we're going to be in, right? Because it's going to be very, very hard for them to accomplish both. It's going to be very, very hard, guys, for them to actually go ahead and lower inflation while keeping us out of a recession. It's damn near impossible at this point. So now they're trying to figure out which road do they actually go with. Right? Well, very simple thing to look at, family, right? I want you guys to get this. Okay? As long as we are raising rates, the dollar is going to continue to benefit. right? USD will continue to go higher. Interest rates going up. As long as they continue to hike rates, the dollar will continue to gain strength. In the asset market, like the S&P, the US 30, NAS 100, those are probably going to lose strength, lose value over time. Now, if they end up reversing course and they're saying, nope, we're actually going to start lowering interest rates again. And once they do that U-turn, guys, going from raising rates to now lowering rates, the opposite of what we've been experiencing lately is actually going to occur. Right? Where now when they start lowering rates, the dollar is going to start to go down, while the asset markets as a whole should probably appreciate over time because of that. Okay? So really understand, guys, that correlation between interest rates and what is actually going to happen to either the currency market or the equities market, right? The indice market, whatever you want to call it. So being, these things is very important to be aware of, right? This is how you really position yourselves, guys, in the markets, and do really well for yourself when you're trading, when you are aware of what's happening from an economical or a fundamentals perspective, right? But let's see what else we got in the building today, family. Right? Shout out to every single one of y'all that's with me tonight. I appreciate y'all. Go ahead and smash that like button for your boy. Let's go ahead and smash it, family. Yesterday we were able to smack 200 live viewers, right? And it's absolutely amazing to see. The goal is eventually to get to over 1,000 live viewers on these streams consistently. And I know it's only a matter of time before that actually happens, right? But shout out to every single one of y'all that's rocking with me tonight. We got Trinidad and Tobago. We got New York, Orange County. We got Kansas City. We got Nigeria. What is up? What is up? What is up? Let's see. Las Vegas in the building. What's going on, my brother Sam? Good to see you. TJ. What's going on, TJ? Good to see you in the chat as well. Brother Joe, I see you. Right, Sacktown in the building. We got New York in the house as well. What is going on, family? Glamorous Princess, I see you in the building. What is up? What is up? I appreciate you for rocking with me tonight. We got ATL in the house. We got Wales in the building. Shout out to you guys out there in Wales as well, family. So, very simple. Like I mentioned, tomorrow, right? Tomorrow's going to be a very, very important day, family. Right? Tomorrow's going to be a very, very important day. Okay, early morning. Right in the morning, right before New York session, we do have GDP, right? This is going to be the big deal right here, guys. If this number comes out negative, right? If we have a negative dash in front of anything that comes out, then that's, again, a recession, okay? The markets will react in a very, very strong way based off the data. Again, here are two scenarios, guys, on what can happen based on the actual data itself. If GDP does come out negative and we experience 2 quarters of negative growth and we are in a recession and the stock market will go to hell, it will start to drop again, right? The currency, like the dollar, the safe havens, those will actually increase in value. So dollar goes up, the equity markets go down if this does come out at negative GDP. Now, if for whatever reason, magically, right? If for whatever reason, GDP actually comes out positive, see, then the flip side is going to occur, right? Now, again, I don't believe it's going to happen, right? I mean, I keep on updating, this GDP Now tracker that the actual, Atlanta portion of the Federal Reserve, and based off their tracker, the latest estimate for GDP is at negative 1.2%. So again, I'm pretty positive we're going to come out negative. But if for whatever reason it didn't, then the stock market is going to fly and the dollar is going to go to hell, right? So that's just pretty much the scenarios that we have here, guys, when we're looking at, GDP going into tomorrow. Now, again, I expect this number to come out negative. So I'm going to expect the equity markets to absolutely go ahead and go lower, right? So let's actually go ahead and take a look at the equities. And we can start off, guys, by looking at the equity markets like the indices over here. Pretty much to start off today's session, right? So we have the S&P, the US 30, NAS 100, which, again, are pretty much the most popular ones that a lot of traders like to trade now, especially anybody that does trade indices. Right now, the question is, all right, Abel, I get that, right? But what can we do next? Like, where can we realistically look for opportunities to go ahead and get involved, if we are eventually going to go back bearish, right? Now, what I think, or areas that I want to be focused on, guys, all right, is that we're actually at a very interesting level right now, right? Where realistically speaking, price could literally just start tumbling from right here, right? But what I want to see is if price is able to come up to this area up in here, right? Anywhere between 40, 50, I would say maybe 40, 70, 40, 80, right? If we're able to see the S&P 500 come up into that 40, 80 area, guys, then that's where I would realistically be comfortable with looking for, a lot of shorting opportunities here in this specific market, right? Going all the way back down, to this area of demand all the way at these lows, right? So that is my general opinion if the actual numbers do come out negative overall, because the market should react in a negative manner, guys, based off of a bad GDP report, okay? So overall, I still would like to see, if we're able to see this spike up, if we're able to see this, again, the whole keyword there is if price spikes up, then that would be absolutely nice, and that would be a pretty good area to go ahead and look for some shorts from. And I'm really just looking at, previous levels of structure to the left, key levels of structure. All right, key levels of structure. We can see this key levels of structure, right, where price has acted as both support and resistance numerous times. But the reason why this is also a major key level of structure on top of it is that we also have an area of supply, right, that is also right here at that key level as well, right? So just looking at previous structure to the left, lining that up with a very, very significant level of supply, right? If we're looking at it from a supply and demand standpoint, it gives me a lot of confidence in this type of idea right here, to look for the continuation to the downside, for the S&P 500 as a whole. So that would be my personal guess. Now, again, I'm not sure if price is going to get up there, right? The market is going to do whatever it wants to do at the end of the day, but overall, I do like this potential area up here to go ahead and look for some shorts from, right? So that's where I'll be keeping my eye on. If we're able to get up there, that'll be cool. If not, if we don't get up there, then it is what it is, right? Then we're probably going to end up continuing that bearish trend that I believe we're going to be in. All right, so that's just pretty much my opinion, guys. And again, I could do the same thing for a lot of these indices, but they all pretty much move very similarly. All right, so we got, US 30. Again, I would like to see that come up into this area up here. All right, this, 32,700 level. If we can get up to 32,700, 32,800 in this area is really where I will be very, very comfortable with looking for opportunities to go ahead and go short from. All right, just pretty much looking at where we are in terms of, structure, in terms of our range. And I just feel like that would be the best, price for me personally to go ahead and get involved, right? And it's going to be similar to, what I'm looking at for NAS. Very similar, same concept. NAS is already up at this level, very interesting level. So that's definitely something to keep in mind, all right? But overall, yeah, we are at a very interesting level right now for NAS. So I wouldn't be surprised if we do start to see price actually go ahead and roll over from that specific area that we're actually testing right now as we speak, right, for NAS 100. Right, but overall, that's pretty much our quick outlook, guys, of the indices, the index market as a whole, based on what could happen tomorrow. Again, the projection right now should be that we're going to come out negative, right, for GDP. Negative GDP is not good for the economy, right? That means that the economy is starting to compress, it's starting to shrink, right? And that is technically not a good thing, right? So we should see, these indices, guys, absolutely going to go bearish based off of that data. That is negative data for the actual index market. Okay, so obviously we'll figure out exactly how it comes out tomorrow, but that's pretty much how we should be playing that overall. Right, so let's see what else we got here. Let me go ahead and catch up with the chat. Let me see. All right, we got Sin City in the building. What's going on, Anthony? Good to see you. All right, let's see. Here with you, my guy Devin. What's going on, my brother? Shout out to the Michigan squad. I appreciate y'all out there in Michigan. Let's see, bro. You gave me my trading foundation, learn market structure. That's amazing. I appreciate you, Go to Investor. Thank you for rocking with me. Right. What about gold if GDP comes out negative? Yeah, let's actually go ahead and take a look at gold. Jump right into gold and see what we can ultimately really come up with for gold as well. All right, let's see. We got Jamaica in the building. Shout out to you guys out there in Jamaica. I appreciate y'all. Can you explain why indices took a hit with FOMC news again, Coach? Yeah, for sure. I mean, the indices as a whole, they didn't necessarily take a hit. They actually benefited, right? Because they actually gained strength pretty much in my opinion, which is based off of, you know, Jerome Powell's optimistic approach that he was talking about, right? Like, you know, and like the number, you know, 75 basis point was pretty much already guaranteed for weeks now, right? Like it was already, like the market already had priced in, you know, that 75 basis point rate hike weeks ago, right? So that's probably why we really didn't see such a crazy negative reaction to it, right? Because again, interest rates going up usually isn't a positive thing; it's usually a negative thing. But since it was already priced in, the market really didn't give us no crazy reaction to that, besides it gaining strength based off of Jerome Powell's optimism, right? But like I said, and like I will say, I still believe that it's still going to be short-lived, all right? So overall, yeah, they ended up gaining strength, but that's just more so to get up into my kill zone, so then I can go ahead and short the hell out of this. I'm still very much bearish the S&P. I'm still very much bearish a lot of these indices, you know, and as long as the sentiment does not change, we stick with the trend, okay? We stick with the trend, all right? So let's see what else we got here. Can we rely on market structure in a bear market? 100%, right? Market structure is like a component of the actual market itself, right? You're not going to understand technical analysis if you do not understand market structure. Like you have to, like market structure is like the foundation is to all technical forms of analysis out there, right? So you got to understand it. I see. So basically, you don't trade right away based on the data that comes out every day. Instead, you're waiting for data to push price into a place of supply and demand, and then trade on the data or the sentiment itself. Yeah, that's a great way to look at it, K-Lease. It really is, right? Because I don't trade like the actual releases, right? Like I used to in the past, and it never used to work out in my favor. I used to always get destroyed. I used to always blow accounts because I used to try to trade the actual release itself. Now I don't do that, right? It's either I'm getting into the trades well before the actual release because I was trading the rumors, right? Or now I'm going to wait for after the release, and then I'm going to look for, you know, continuations of what I believe the bias is at that current time. But I'm going to wait for it to get to key levels of supply and demand 100%, right? That's exactly what I do. Absolutely, right? Because that's just, in my opinion, that's like one of the best ways to actually approach these markets, right? Identify your key levels, identify your strong points, identify your points of interest, right? And make sure they are areas of strong supply and demand, and then just wait for price to get there. Like literally just sit on your hands, like sit on it, all right? Like for example here, right? Like if actually let's go to gold, right? And we'll take a look at gold, right? But for example here, if we're looking at gold, and hypothetically speaking, right, we see that we just had a nice little jump in the market right here for gold, right? Nice little strength right there, right? So we could look at this and be like, okay, you know, we clearly had a lot of demand pick up for gold at that specific price point of around 1720s. So if price comes back down there, then we could possibly see another reaction if we're going to be expecting some type of a pullback in the market. Okay, the overall thing that I'm doing here, guys, and just to keep it simple, right, especially when we're looking at, you know, in terms of supply and demand, the major thing is to understand what the overall flow of the market is, right? Like, what's the current order flow of this market, right? Right now, we still have been pretty bearish, but as of recently, we started to see price action, and we started to notice that price was starting to slow down. Right, so yeah, overall we are still technically in this bearish trend, but we noticed that momentum was starting to die down by how price started to react. Right, we start to see it, and then we seen this strong break up, broke structure. Right, off of that level of structure, price ended up giving us a nice strong reaction, which could create a demand zone. And now, if we are going to continue in this, you know, bullish tone, which I do believe it is possible for gold. Right, I would like to see guys gold now come all the way up to at least the 1750 level. So if I expected to come up to the 1750 and now I want to set myself up for that, very simple. Right, now I have to wait for price. Now, or what I would do is I'm gonna wait for price to come into my demand. If I'm expecting a buy, I want price in a demand zone. I want to buy from demand zones, and I want to sell from supply zones. Okay, remember that. I want to buy from demand zones, and I want to sell from supply zones. Right, and if any of these things do not work out and price breaks it, then you can utilize it as a flip zone. Okay, So yeah, that's pretty much a good way to look at it, and that's how I would personally do it. Let's see, I was looking at those levels right before you mentioned them. Let's go. All right, let's go. All right, what's going on, Martha? Good to see you in the chat. I appreciate you, right, for rocking with us tonight. GDP affecting Forex, 100% it does, right? 100% it does. All right, GDP, CPI, PPI, NFP, right? All these different news releases, right, that we hear all the time. Like every single one of those are going to have an effect on the currency market. Right, the global currency market, guys, is dictated based on what's actually happening in the world, right? Based on economies, from an economic standpoint, right? So yeah, if we're experiencing a lot of downturn in the markets, or if we're experiencing a lot of pain, a lot of uncertainty, a lot of doubt, then sentiment is going to be created, and based off that sentiment is going to influence what these currencies actually do and how they trade against each other. That's why it's so important to get educated on fundamentals and understand it. When you really get ahead of the game, family, and you really understand fundamental analysis, and you're already good at technicals, that's really the missing piece. I'm going to keep on saying this literally forever, right? I'm going to keep on saying this forever. If you are already good at technical analysis, and whether you're seeing consistent results or whether you're still not seeing consistent results, start to understand fundamental analysis and watch how your trading absolutely improves. Your trading is going to go through the roof once you actually understand what the hell is actually happening in this world from an economical standpoint. Right? Because when you understand how to play sentiment, now you don't have to question what the order flow of this market is. Because now you're riding with the big boys. Right? Now you're going to be riding with the sentiment in the market. Sentiment is dictated by the smart money, by the big boys. So when you're able to identify that sentiment and you're able to ride it out, now you're aligning yourself with the big boys. Okay. Let's see. What do you think about oil? For sure. Let's go take a look at oil as well, right? So overall, though, guys, for gold, for me, I still think we have some more upside for gold. I think, right? I would love to see gold at least come up to this 1750s level. All right, so I would like to go ahead and look for more buys. So if we're able to see price, go ahead and give us a correction back down, then we can go ahead and look to buy it up, at least up to this 1750s level. All right, so that's what I would be looking for going into gold, going into tomorrow morning. All right, with obviously we have GDP in the morning, so be mindful of that. But yeah, right back down to the 1720s is not looking like a bad idea or a bad area to look for a potential buy from. Risking 2% and then just seeing if we can go ahead and get up to that 1750s. All right, so that's not bad overall. All right, let's go take a look at oil. All right, see what oil is doing. All right, let's see what oil is doing. Let's see. What up, Abel? Do you ever have any contact with my boy Stevenson? Yeah, for sure. That's my brother. All right, that's my brother. I can call him right now, for sure. All right, shout out to that boy Stevenson. Let's see. I love these streams. I appreciate you, young major. I'm a profitable trader with FTMO, but being with FTMO forced me to up my fundamental game. Yeah, I mean, listen, again, if you really want to be the best trader possible, then you have to learn every aspect of trading. Don't just settle, for one thing just because you feel like you're seeing some type of profits. If you want to get to that point where you're making millions of dollars and billions of dollars a trade, like, you might want to be more aware of everything, right? But yeah, no, it really plays a huge role in a lot of things when you understand it all. Let's see, what platform can I trade? NAS 100. I mean, you could pretty much almost every broker offers it. You're gonna have to just find a broker that you've been using, and then go ahead and add it to your MT4. All right, but yeah, a lot of brokers allow you to trade that. You're just gonna have to find it in your actual MetaTrader 4, wherever your broker put it. I see. What are the effects of interest rates on gold? Right, that's a good question. Right, that is a good question. Before I even talk about oil, let's actually answer this question real quick. Right, now that's a good question because obviously, gold and interest rates are also typically they have some type of a correlation as well. Right, where interest rates start to increase. As a matter of fact, let's actually go ahead and really compare this. Right, I want to see if I could bring up. I want to see interest Fed fund rate. All right. Let's see. All right, so what we're looking at right here, guys, right? Literally, this is pretty much showing us what the actual interest rate, for the Fed, or at least the Fed's fund rate, pretty much is, right? And what we can do is we can utilize this and actually compare it to what gold has done around the same exact time. And then we're able to pretty much figure out how the market, how gold reacts, to that type of data, right? When interest rates are going up. Right, so we could pretty much look at this, and let's say, obviously interest rates started going up pretty much this year. Right, like looking at this right here, we had this big spike up back, right before COVID, and then ultimately they ended up crashing it back down because President Trump was like, listen, Jerome Powell, if you want to keep your job, you better start lowering rates. And that's pretty much exactly what happened, right? But then we ended up starting going higher, right? We started seeing interest rate hikes pretty much at the beginning of this year. Right, so if we really correlate this with what happened with gold around the same exact time, we're able to figure out if there is some type of a correlation here, with gold and these, in interest rates as a whole, right? So I'm trying to line it up for you guys so you guys can see it. All right, so we have, we could say right here is fine. All right, so we're looking at this right here. This is literally the same exact time. Right, same exact place. Let's see, at least as close as possible. Right, it's not going to be perfect, but it's going to be close. All right, and as interest rates started to go up, what did we see with gold? We seen a short-term little run, right? But then we ended up finding a plateau right here, March 22nd. Right, where's March 22nd right here, and the actual federal funds. What rate was it at? March. This is when they really did their first big rate hike. Right, so March was the first time that they actually went. Let me actually bring it up. Right, March went from 0.25, right, and they went all the way up to 0.5, and then they went up to 1%, then they went up to 1.75, and now we're at 2.50. Right, but March is pretty much where they really start to say, you know what, we're going to start to be a lot more aggressive with raising rates. Because for the most part, it's been at 0.25 for a while, and then in March, they raised it 0.50. So ever since they started raising rates, we can see that the price of gold has actually started to decrease in value. Right, like ever since they started to raise it, going from 0.25, which is what it was at for months, to 0.50, right, the gold market started to react in a negative manner. So with that type of data and being able to just look at what historical data is telling us on how the market reacts during a certain period of time, we should expect more downside for gold. That's just as simple as it gets, right? Using historical data to identify these things and then being able to come up with a bias based off that. Okay? So yeah, overall, I believe we still have more downside. Just based off that alone, we still have more downside for gold coming up because they're still raising rates. They just raised rates recently. Yesterday, they just raised rates. Now, how can we take advantage of anything, though, with gold with that being said? Right? Well, now it's all about finding an area of structure for us to go ahead and really play off of. Okay? So this is an area of supply that we have all the way up here for gold. I'm not sure if we are going to make it up there, but if we do make it up there, I'm very much going to be looking to short the hell out of that. Very much going to be looking to short the hell out of it. All right, another thing I'm going to be doing too is just keeping my eye on how we play off of these levels of structure all the way up here at the highs. All right, because if we're able to see a shift in momentum show, then that could also be a reason to jump in. Right, because right now, we're not at an area where we, at least for me, where I'm not interested in taking trades. Right, I'm not interested in trying to buy or sell right here where we're at. Definitely not looking for the buy because we just experienced a strong move. Right, and if we buy up at this level, then that's going to be buying at premium levels, and we don't want to buy at premium price points. Right, and I don't want to sell neither. Right, because I still expect some more upside. All right, I want to see price come up to this area first, and then we start looking for opportunities to short if that's the case. All right, but overall, that's pretty much what I'm looking at for gold. Long term, I still expect more downside. It's just a matter of seeing what price ends up doing. Either we're going to react off of the 1750 level and go bearish, or we're going to come up to around 1765, and then from there we can go ahead and go on bearish, guys. So that's my general opinions for gold. Again, tomorrow morning, right, with GDP, you know, we might be able to really get some insight on when is a good time for us to actually go ahead and get involved. All right, so definitely keep in mind tomorrow morning, you know, things could obviously change, and we just want to be prepared for it. All right, prepared for whatever happens. So if we see the market spike up into this level up here and then we immediately get sucked down, I'm probably going to be looking to short the hell out of that, just because I'm already bearish and I'm already expecting, you know, bearishness to actually come in. Welcome to our newest subscriber. What's going on, Patience? Good to see you in the chat. I appreciate you. All right, shout out to you. All right, let's see what else we got here. Will 75 point, will it affect on gold? It would, but it's not going to be as drastic, because 75 basis point rate hikes has already been, you know, it's already been obviously guaranteed for weeks now, right? So it was already priced into the markets. Let's see. I love jumping on these sessions because Abel makes sense when other educators don't. I appreciate you, Maria. Right, I try to keep it as simple as possible, right? Let's see. GJ has dropped. What would that mean to buy in that demand zone? Let's go take a look at oil real quick, and then we'll go ahead and take a look at GJ. All right, so taking a look at oil, guys, obviously we all should be aware of the fact that oil has just been absolutely flying. Right, even lately we have started to see a downturn for the past month or so, but for the most part, you know, this thing has been, you know, if we look at this thing from more of a macro scale, yeah, it went from, I mean, pretty much the end of last year at $30, $40 a barrel to now at trading over just under $100 a barrel, right? So oil has been absolutely on fire, and we all know exactly why. There's been a ton of different reasons, a ton of different scenarios that have coming out, right, that have caused the price of oil to absolutely skyrocket. But what can we see now with oil, right? Because now oil is at a very interesting level, strong level of structure right here, and there is a chance for, you know, oil to really rebound off of this level. You know, we are starting to see massive rejections from this area of demand, right? We see that demand clearly picked up. We came down, we reacted, came down, we reacted again, broke structure. Now we just came back again, and now we're pretty much reacting once again. Now again, I don't know. For me, I'm still bullish. Like, it's just from a fundamental standpoint for oil, and just because everything that's going on, right, with the supply in oil, the demand of oil increasing tremendously, but now the supply isn't as, you know, readily accessible because of sanctions and because of other stuff that's been going on, right? And to me, that just tells me that this is going to be continuing to increase in value, right? You know, as demand continues to increase for an asset, but there's not supply available for it, even with sanctions, it should cause the price of that asset to increase, right? So I think that we still could see more bullishness to come in, guys, for oil. My opinion, I think we still have more upside, you know, for oil as a whole, right? So, you know, that's what I would like to play. If we come back down, then looking for an opportunity to go long might not be a bad bet. All right, so that's my outlook on oil. You know, keeping it nice and sweet, not too complicated. I'm still very bullish that. All right, I'm still very bullish that. All right, let's go take a look at GJ. Right, GJ has dropped. What does that mean? All right, so taking a look at GJ. Right, so we did get a nice reaction, guys, from this area of supply that I wanted to see. All right, literally gave us a nice strong reversal up in this area. It did spike up above these highs as well, but then immediately ended up turning around. All right, now what can we expect next, you know, for GJ? All right, should we expect, you know, a lot more downside, or is this downside more so a short-term correction to continue going to the upside? Right, that's the question that we have here. Now, in my opinion, right now, let's just keep in mind, right, we really have not done much for, I mean, the past month, right, past month and a half, almost 2 months. We really haven't done much for GJ. Okay, we're just been trapped inside of this range, continuously going sideways, and at some point, this thing is gonna break out, right? Like, we're eventually gonna see this thing finally break out and start to trend in one way or the other. The question is, all right, Abel, that's cool, but which way are we actually going to trend? Like, in which direction are we actually going to trend at? Now, again, that really depends on how you're looking at it. For me personally, I think we actually start trending higher. Right? I believe we're still very much bullish. Right? Overall, we still been flowing to the upside for the past 2 years now. Right? We've been very bullish for the past 2 years. Okay, I think we still have more upside, personally speaking, because I still want to see. I've been telling you guys about this price level for a while, but I still want to see price come all the way up to 175. Like, that's really going to be my major point of interest that I believe we can see price reach up towards. So that's how I'll be looking for. I'll be looking for more bullish continuations. Now the question is, all right, bet, Abel. So where can we look for bullish continuations from? Look at previous levels of structure, right? And combine key levels of structure. As you can see, this area has acted as support and resistance numerous times, right? But when you're looking for these key levels of structure, you also want to get some type of confluence with it being shown as a strong level of supply and demand, right? For this example, we have this where price came down to this price point here at around 163.7, 163.8. And then the demand for the pound over the yen absolutely increased tremendously. So since we did have so much buying pressure at this price point here, then guess what? If we're able to come back there, that can be another opportunity for us to go ahead and get involved. All right, is this making sense, family? All right, drop some threes in the chat and smash the like button if this is making sense real quick. All right, because it's all about, again, just understanding exactly what we're looking for. Right now, I'm still bullish. Right, I'm still bullish. Okay, if I want to look for an area to look for a potential setup from, right, then I have to identify an area that makes the most sense. And an area that makes the most sense is going to be down here where we have evidence of previous structure, right? And not only that, but we had this low that was created, the market pushed up, and then we created a higher low. So a retest back to the previous higher low can show or can prove to be a level of demand that allows us to go ahead and jump in and take a nice freaking trade. This is sauce, family. This is sauce. So, with all that being said, yeah, I would be very, very comfortable looking for an opportunity like this to go ahead and jump in. Right? And the reason why I like this is because if we are able to get an entry, right, we're going to have a freaking crazy risk reward, right? Especially if we're able to finally break out and start trending again. Right? If we're finally able to actually see a strong breakout, we're at least going to come back up to the high of the range. At least. So yeah, if we're able to get an entry here risking 2%, we're going to be able to make 10%. Risk to reward here is 5.5 to 1. So risking 2% to go for 5%, to go for 10%, risking 2% to go for 10%, family, that is absolutely beautiful. I would do that every single chance that I get with no fear whatsoever. And even if I do take a loss on the trade, that's one of those trades where I'm just going to be like, damn, all right, shit, that should still look very good. All right, you have to accept it and move past it. Okay, but it does look good. Okay, absolutely, this is value. Oh yeah, 100%. Okay, so that's what I'm looking at for GJ, also going into tonight, family. So I'm gonna go ahead and mark this one up and keep that one on my radar. Now UJ is the one I told you guys pretty much last night that I was gonna keep my eyes on. That was probably one of my favorite setups. And just look at how price reacted. Right, it did end up missing my trade. Right, Yeah, by about 3 pips, right? So it actually missed my pending order literally by 3 pips. The crazy thing is, it actually ended up almost spiking up into it. I thought I was going to get filled right as the actual 230 candle opened up. Jerome Powell started speaking. You know, I still had my pending order open. So I'm like, okay, man, let's see if we can get filled now. And it came very, very close, literally within 3 pips. And then it absolutely just ended up turning around. And now we're sitting here today. No trade in UJ. And this thing is just ended up tanking. Like, we're talking about, guys, this thing ended up falling. Oh, yeah, 200 pips to the downside. All right, so it is what it is. You know, very unfortunate. It was the one, like I said, I mentioned you guys yesterday that I really, really liked, that I was going to keep my eyes on, and I did. I just set the pending order. I should have been probably more aggressive and probably should have just market execution did. But it's cool. You know, it is what it is. You know, we're not going to, especially when there's major news on the horizon, you know, I'm not going to force anything. I was only risking 1% anyways on this setup because of the news, you know, but it is what it is. You know, overall, it still ended up doing exactly what we wanted it to do, guys, right? And this comes back to why or how I was looking for that area to look for the continuation on the trade, right? Well, if I'm expecting pullbacks in the market, or I'm expecting more bearishness to at least come in, and we start to see the market already creating these structure points, it's all about lining up where our key levels are, right? Like, literally use previous history to identify where we could potentially react from in the future. But now also, when you're doing that, don't just look at it blindly, but when you guys are actually identifying these areas of interest, these areas of structure that we could potentially play off of, you also want to identify the area of supply and demand, right, and where it's actually located. So we can see that we had this little order block right here, bearish, bullish, bearish candlestick, and then from there, the momentum really started to pick up. All right, so as you see, as soon as price came back up here, since we did have a lot of selling pressure at this price point, a lot of selling pressure, when price came back up, it literally just tipped it, and then it just completely fell over. All right, so, you know, it is what it is. Like I said, I don't get upset about these things. It literally makes no sense to. But it's a good thing just to be aware of, right? And just to at least, you know, be confident in what you're doing. Because, again, it literally did exactly what I wanted it to do. It just didn't actually reach my entry point, right? But let's go take a look at now UJ and what we can expect now, guys, right? Because overall, it's about, all right, wait, well, that's cool. What's next, right? Well, obviously, right now, there's nothing that I'm interested where price is currently at. You know, I do think that we are going to experience more downside, you know, but I want to see, like, I really want to see price come all the way down to around this 134 level, right? 134 is really where I want to be comfortable with looking for some long-term buys once again here for, you know, UJ, you know, because as of right now, you know, we're in this little bearish trend that we're experiencing. I think it could actually continue, but around that 134 is where I feel like we could find, you know, the demand for the dollar to absolutely start picking up once again, right? So I like this area right here, 134. I feel like this level is just going to be a super attractive level for me. And I feel like that's going to be able to give us some discounted prices here on UJ. So that's what I'm looking at. You know, overall, just going to be patient. Again, not going to force anything. You know, if we do end up pulling back up to the upside before the morning, then that could probably trigger us another push lower. Right? But ultimately, I do expect price to come down to that 134 level. Right, for UJ. All right, so let's see what else we got here. Let's see, 144 are watching. Shall we give some shout outs with more likes? Yeah, nah, definitely go ahead and smash the like, family. Go ahead and smash the like button, family, as well. Definitely helps me out tremendously. Right, let's see, made 120 pips off UJ. Let's go. I caught the whole move. I see a lot of y'all caught that move. Let's get it. I caught the UJ short, waited for the fake out to let buyers jump in. Let's go. Shout out to you guys. All right, like I said, I should have been a little bit more aggressive, but it was cool. You know, I'm not stressing, right? It is what it is. All right, let's see. GJ might turn around right now. All right, I mean, yo, go ahead and, you know, if you like what GJ's doing, because right now we're just starting to drop. All right, I'm interested in buying GJ around that 163,800. All right, so unless we down there, I'm chilling. Other than that, this thing does look like it wants to continue going lower into that point. Hey, Abel, can you show me how to utilize the tool that measures pips? I still don't know how to read that or anybody, to be honest. Yeah, for sure. I mean, this tool right here is very simple tool. Honestly, this tool is probably something everybody should utilize just to make sure that they are doing proper risk to rewards. But these are called the long position and short position tools. They're right here, right? Long position and short position tools. Long position is obviously for buy setups. Short position tool is going to be for short setups, sell setups. All right, so if we're looking for the sell, stop loss above the high, target to wherever you want to get to. But one thing you want to just pay attention to when you are doing this is just pay attention to what the risk to reward is. Right, the risk to reward is pretty going to be the biggest thing you want to focus on, right? Risk to reward is right here in the middle. Risk to reward ratio 3.01, right? So it means that my risk or my reward is 3 times my risk. But that's how you pretty much use it, right? Very simple, straightforward. Let's see, sir, first day on your channel and love your TA. Subscribe and we'll come every day to listen to you. I appreciate you, Asad. Thank you so much for everything. Right, shout out to you out there in Pakistan. Definitely means a lot to me. Keep teaching, Abel. I got you. Come on, you know me. All right, we're going to make this, we're going to turn this up for real. These market conditions have been changing a lot lately, and banks understand retail traders have been getting better every day. You see a lot of fake outs and no's. I've been waiting on confirmations at the higher time frame. That's a great way to look at it, Eric. That really is. You know, just being aware of things like that will definitely give you a big heads up in the market for sure. I still count pets mainly, but I don't know how to read the tools. Y'all make sure to like the video for sure. All right. Let's see. XAUUSD. You want to look at silver? Yes, sir. Like the stream, guys. It's fine. You're always going to leave money on the table in these markets. Yep, 100%. All right. So, again, that's UJ. I think we can see more downside for UJ. Like I said, I want to see UJ come down to, you know, these 134 levels. And then from there, I believe that we can go ahead and start to buy long-term UJ once again. All right. Definitely feel like that is very possible. Okay. All right, so let's go take a look at silver. Since somebody said they want to look at silver, sure, let's go take a look at silver. Right, so silver, what has silver been doing? Well, we have literally not been doing much since pretty much over a year now. Actually, almost 2 years. You know, we just been pretty much going sideways for the most part. But in a more relative time, we have been seeing, obviously, the market starting to gain a lot of selling pressure for, you know, silver. I think that this is, in my opinion, I could be wrong. But I think eventually this thing is going to find some support. It's going to find a lot of demand. And I think, in my opinion, that silver is actually extremely undervalued right now. All right. I think that silver is extremely undervalued right now. All right. And I believe that there is a chance for price to actually go ahead for silver to rebound and start to fly and ultimately create new highs, right? Ultimately surpasses high of $50 all the way over here, right? So that's just my opinion. I think it's completely undervalued, right? Now, in terms of technical analysis, well, we are at a very interesting level of structure. Very interesting level of structure that can give us a nice reaction off of that. So I would not be surprised if we do actually see this, you know, this bullishness for silver to continue. Because right now I'm on the weekly time frame. I'm on the big boy time frame, right? But even when I go to the lower time frame, like the 1 hour, same concept, right? We are starting to see this thing finally start to break out. This right here is telling. I would love to see the market possibly pull back down and then give us opportunities to continue buying this thing up. I'm definitely looking for some buying opportunities, guys, here for silver, whether it's margin trading it or whether it's even investing. Like I said, even if you want to be an investor of silver, I think that is completely undervalued at $19 right now. Like, this is stupid cheap for silver. But yeah, you know, this is what I look for from a technical analysis perspective. From a margin trading perspective, yeah, I would love to see the market pull back, but then ultimately I want to continue to buy silver. I think that we are extremely cheap right now, and I could see us possibly go, you know, all the way back up to around $23, $25 an ounce or so, whatever it is. Yeah, you know, I could see that occur. All right, so I'm bullish on silver, guys. I am bullish on silver. Let's see. Fundamentally, why are you bullish on GJ? All right, that's a good question. Fundamentally, why am I bullish on GJ? right? Well, from a fundamental standpoint, from the most part, right, I'm just betting on the fact, more so than anything, that the pound's interest rate and just what the the Reserve Bank over there, and I'm betting on their policies as opposed to Japan's policies, right? The Bank of Japan's policies, because the Bank of Japan, as of right now, they're still pretty much. I'm not gonna say that they're downplaying inflation, but their concern is not inflation right now, right? Their concern is still trying to see expansion over there in their economy. So they're still doing the exact opposite of what pretty much every other economy is doing. Right, they're still printing money. They're still going through the process of easing. Right, they're still, giving out such and such, whatever the case may be. Right, they're still literally, again, being very passive, while every other central bank is being very aggressive now with trying to fight inflation. So because of that, and because of the aggressiveness of other countries, other economies, I'm just betting on the fact that the pound is going to continue to gain strength over a stupid weak Japanese yen. Now there are signs, and there has been a lot of talks where obviously that eventually the Bank of Japan is eventually going to finally reverse course and start to tighten up just like everybody else. But for right now, it doesn't look like it's going to happen anytime soon, right? They actually just had their latest interest rate report come out, I believe, last week, and they didn't even change rates, right? They're the only ones besides, I mean, even the Swiss franc actually changed rates too. Even though the Swiss franc is still negative rates, they at least, went from negative 0.75 to negative 0.25, right? But more of the story, Japan's, their policies right now is more so geared towards economic expansion, which could benefit their equities market, but is not going to benefit their currency when they're still thinking like that, right? So because of that, that's why I'm extremely bullish still, pound over yen. I hope that made sense, right? I hope that made sense. But that's pretty much why I am bullish on it, right? And why I do believe we are going to continue, because pretty much almost every asset across the board against the yen has been flying, right? And it's literally just because of what I told you, right? Their policies over there, the Bank of Japan's policies are just a lot less aggressive towards inflation and focused on economic growth, while everybody else is trying to combat inflation and trying to slow down economic growth pretty much to try to fight inflation. So it's just a different look at policies, all right? And that really does dictate a lot. It really does. All right, that was a great question, though. Let's see. Can you explain your strategy from top to bottom, if you may? Merci much. From top to bottom, I'm not going to be able to do it right now, all right? If anything, I'll have to save another stream for you guys to do that. Right, but overall, it's not that complicated. Again, I'm very, very simple, guys, because trading needs to be simplified. My whole, I'll give you a general basis rundown of how I approach the markets, right? So what I do, the first thing I always do before I enter any trade is I need to understand what is going on in the world from an economical perspective, right? I need to understand fundamentally what is happening. And then once I figure out the data, then I'm able to create sentiment off of that data, right? So that is the first thing that I do. No matter what, I need to understand what the sentiment in the market is. Are we risk on? Are we risk off sentiment? Very simple. Are we risk on or are we risk off? As a whole, how is the market reacting, right? Risk on or risk off, right? So that is the first thing that I always do. Then once I figure out my fundamental and my sentimental perspective, my sentimental bias, then I go into the markets and I use my technicals to try to allow me to find entries and exits and all those important things, right? But overall, I'm figuring out the bigger picture first. I need to figure out what the overall macro perspective of the market, and that's what you use fundamental analysis for, and sentimental analysis to figure out what the bigger picture is saying. And then you use technicals just to align yourself with what the big picture is saying. That's at least how I do it. Okay. Now, from a technical perspective, I focus heavily on market structure, price action. I focus heavily on areas of liquidity. I focus on supply and demand, right? I focus on those things when I'm actually trying to create an actual setup and an opportunity from a technical perspective, okay? But the main thing that I utilize is just strictly supply and demand levels, just understanding how to play key levels of supply and demand, okay? That is exactly how I approach it. Let's see. I like your GJ setup. I do see the monthly candle going to close bullish and retest the 160 area. Yeah, it's very possible. Go to the sign up for Abel's Bootcamp. 100%. Listen, I'm gonna be honest. Like, for anybody that does actually sign up for the bootcamp, just be prepared for a lot of value, right? Like next level. If you think this value that I'm giving y'all right now is next level, guys, like the bootcamp is just, it's gonna hit different because it's actually very much structured. Right now, all the value that I'm giving you guys, it goes all over the place just based off the actual questions that I'm asked. Because I'm one of those people, guys, where if I get a question, like I typically like to answer almost every single question, right? Not just for you guys, but also for me. It helps me get better. Okay. But yeah, the boot camp itself is a lot more structured, so it will actually hit a lot of different than just these live sessions where I'm pretty much all over the place. So again, if you do want to take your trading to a whole other level, if you want to get better at trading, if you want to finally start to see some results, then make sure to go ahead and be a part of my boot camp, August 15th through August 19th. Right, we are literally about 2 weeks away. It's going to be absolutely game changer. And anybody that does participate in that boot camp, you are going to get the recordings of each day. You are also going to get the PowerPoints that I used. And for everybody that's ever participated in my boot camps, I'm also planning on creating an even more, or I'm not going to say a private technical, but I'm actually going to give you guys access to also my inner circle community. All right, so for anybody that is either a member here on YouTube, but also people that also participate in the boot camp, you guys are going to be added into the chat. You know, just have a little bit more, a little bit easier streamline of communication with me. All right, so that's going to be dope. Shout out to every single one of y'all, though, that is going to participate in the boot camp. We're going to have a phenomenal freaking time. Guaranteed. It's going to be phenomenal. All right, so let's see. Are you bearish on EURUSD, right? So EURUSD, I am bearish long term, but I think we're going to see the market actually rebound first before we continue. Okay, I could be wrong, right? I could be wrong, but that's what I would like to see, right? I would like to see the market actually go ahead and rebound first, at least break up to the upside, capture all this trend line liquidity, all right? And then eventually go ahead and reverse course and go lower. All right, so that's what I would like to see for Euro. Just keep it very, very quick and simple. Right, but that's literally what I want to see for Euro. I still like to see more upside. I think we're going to actually go ahead and pretty much make our way to around this 1.36 level. That's really where I would like to take some shorts for EU all day long. Right, all day long. See Smart do something like this, and then overall do something like that. That would be pretty juicy. That would be pretty juicy. Let's see. Also, would love to hear your opinion on BTC. I do believe we see in trap buy side liquidity and provide exit relief for the whales on the next leg down post pullback completion. All right, we'll take a look at Bitcoin in a second for sure. Let's see. What is your view on GBPUSD? These are really gems being dropped. 100%. All right, that's the thing, right? Like, a lot of the things that I say a lot of things that I do say, guys, like, they really are extremely valuable. Like, do not overlook a lot of the gems that I provide, because them, like, they be next level for sure. For sure. All right, but let's see what we got here, guys, for GU. All right, so for GU, like I said, I'm still very much bearish this asset, very bearish this currency pair. I think that we could see price possibly come into this level right here of structure. Right, and I really think that we can actually go ahead and actually start to sell off from that area, right? So for GU, guys, if we're able to see price come back up, I would say literally up into this zone up here, right around 1.225, right? If we're able to see price come up to that 1.225, I really like the shorting opportunity from that area, right? Because what have we been doing for GU? Selling, right? What have we been doing for GU? Selling. I mean, we've been selling off GU since 2014. All right, so I think we still have a lot more sell side to go. All right, well, again, as long as, you know, we're in risk off sentiment, as long as we're continuing to be risk off, I'm going to continue to sell pound against the dollar. So again, I really do like this level, 1.225. Right, 1.225. That could be the sweet spot. Right, 1.225. That could be the sweet spot. right? If we're able to get an entry in there, then sheesh, this is going to be a good one. This is going to be a banger, right? Just riding with the overall trend. Go with the path of least resistance. Go with the path of least resistance. Guys, what is the path of least resistance here? Is it to the upside or is it to the downside? Right? What is the path of least resistance? Let me know. Like the stream. Yeah, exactly, D. Warner. Let them know. Right? Let them know. Right? What is the path of least resistance here, family? I don't know. I want you guys to tell me. Let's see. So if Japan does raise rates, will the markets reflect the sentiment or the actual fundamentals if the market shifts? I see sentiment being a news candle, then fundamentals will push overall market. No? Right, well, sentiment is what really pushes it overall, right? Fundamentals can actually be the news candle, right? If we're talking about like a candle that actually reacts based off news, that would be probably more the fundamental aspect reacting that and causing that news candle. But the sentiment is that's what creates the overall flow. Sentiment, right? Because you got to think about it. As a trader or as an investor, you're making decisions based off how you feel what the market is going to do, right? AKA sentiment in the markets. And that feeling is what's going to cause you to actually ride that position out for a while based off that feeling. But the data is what creates the sentiment as a whole. But the data is what also causes large swings in the market, right? Big news candles. But the sentiment will always take over. Will always dominate at the end of the day. Okay, so yeah, GU, I like that GU up there, guys. 1.225 looks really, really juicy. Let's see. I signed up for the last boot camp. That was worth the money I spent. I appreciate you, Maria. Thank you so much. Let's see what else we got here. Let's see. Do you take supply and demand setups on the higher time frames, or do you wait for confirmation and enter on the lower time frames? Just curious. That's a great question. I use both. All right, just because I mean, if I'm looking for a specific trade, right, and I'm looking initially at the bigger picture, like the higher time frame, then yeah, I'm obviously going to pay attention to that, right? But one thing that I also look for is if you find a supply and demand zone on, say, the daily time frame, 4-hour time frame, more times than not, as you go down a lower time frame, you're also going to be able to fine tune that supply or demand zone, right? And then you'll be able to make your actual point of interest or your kill zone, your sweet spot, much smaller. But yeah, both those levels, right? If I like a setup on the 4-hour, then I'll take it right off the 4-hour, and I'll just base my perimeters based off the 4-hour time frame. But if I see it on the 15-minute and I just like that little intraday short scalp type of setup, then yeah, I'll take that too. I'm gonna take whatever the market gives me, right? If the market gives me different time frames, then I'm definitely gonna react as long as it's logical, right? As long as it makes sense from a logical perspective, yeah. Let's see, downside. I've been doing a lot of input research on currency fundamentals. Clearly looks like Russia and China trying their best to devalue the dollar. Let me hear your thoughts about it. I mean, yeah, of course, right? Russia definitely is trying to. And not just Russia. Like, there's actually countries out there that are already also playing a part in that, right? So not just Russia and China trying to devalue the dollar as a whole and pretty much trying to remove its dominance that it's had across the board. But there's also countries where I think like India, I believe it's India, right? India actually is starting to allow, foreign countries to purchase commodities and assets from them, and it doesn't have to be in US dollars no more, right? Like that's always been the biggest thing, right? Foreign trade normally occurs in USD. That's why the US dollar is the most commonly traded currency. Like in the Forex market, I think it's 70% of all transactions include the US dollar. Of all transactions in the Forex market, 70% of it includes the US dollar. All right, so yeah, they're trying to take a lot of that buying power, a lot of that power that we have from it being, the most utilized currency away from us. So yeah, that's definitely going to be playing a big role. But I know it was India that is already accepting different forms of payment. Now you can purchase things from them without using the dollar. And there's another country as well. I can't remember. I think it might have been Turkey. No, I don't think it's Turkey. I can't remember what it was, right? But moral of the story is, yeah, there's other countries as well definitely starting to think about it. And you also got to understand, too, like also look at it from the flip side of what we're seeing, right? The dollar right now, I mean, is trading like at crazy, crazy highs, right? Like the dollar hasn't been this high in value in 20 years, right? So because also the dollar has been increasing in value, that is also making it harder for a lot of people to actually operate and continue to utilize the dollar, right? Because the dollar being this strong isn't necessarily always a good thing, right? Especially if we're talking about with our partners across seas, right? Importing and exporting, right? Now it's literally costing a lot of these countries more money for them to literally move and purchase and sell various assets and commodities now, all because the value of the dollar has continued to increase. So if the value of the dollar continues to increase against other currencies, see, now those other people that are using that other currency is now going to have to pay way more out of pocket than they were initially doing, all because the value of the dollar has gone up. So there's also a lot of countries out there trying to figure out different measures so that they're not getting beat up by the dollar, all right? So that they are not, paying way more than they initially expected, all because the dollar's strength is absolutely started to skyrocket, right? So, there's going to be talks of it. I honestly believe that in the next 5 to 10 years, I could be completely wrong, right? But within the next 10 years, I truly believe that the dollar is not going to be the currency reserve of the world, that there's going to be something else. I truly believe it. I mean, it happens, right? Every kingdom has its run. Every empire has its run. Right, and the U.S. and America has had its run for decades and decades now, right? But now we're getting to a point where there's a lot of changes are going to happen over the next 5 to 10 years that are probably going to make the dollar lose, its dominance across the board. Again, that's just my opinion, all right? I'm a nobody. That's just my opinion, though, right? Let's see. Bearish to least resistance. Yep, data creates sentiment. Got it, 100%. What's your thoughts on Bitcoin, right? So let's go take a look at Bitcoin. I know Bitcoin had a little jump up in the markets off of the actual data itself. All right, we had this nice little spike right here, right, off of interest rates, pretty much going up 75 basis points. But what can we expect now? Now, Bitcoin's very, very interesting to say the least, because we obviously did give us a very deep correction here. Like, this is actually the first time, by the way, guys, right? Like this correction right here that we actually seen right here with this drop right here in Bitcoin that we actually got under 19,000. Like this is the first time that Bitcoin has ever in a correction period during a bear market has ever retested previous higher highs of a last run. Like this has never happened before. Right now, I'm not sure how significant that is or how significant it is for you, but that definitely is very telling, right? Every single bull run that we've had, the market never actually pulled back to the previous highs. Like never, right? It never actually pulled back to its previous highs. It never pulled back, but most recently, it actually did. Now again, that's just just something that's cool to look out for. But with that said, I do think we start to see some type of bullishness here for Bitcoin as a whole. Right, I do think it, right, based off what we've been experiencing, based off how price action is looking, right, momentum to the downside has started to slow down, right? Now we're starting to gain momentum. I can see us realistically coming back up to around the $30,000 range for Bitcoin. Now, does this mean that this is the low of this bear market that we've been in for the past year and a half? I don't think so, right? I think that we still have more room to go to the downside overall. So yeah, I think we're going to see a nice push back up to around 30,000. But then I'm expecting possibly more bearishness all the way down, in my opinion, to around 14,000, 15,000. If we're able to get to 14,000, 15,000, I'm going all in with Bitcoin. No questions asked. I'm buying as much as I freaking can. I'm selling the house. I'm selling the dog. I'm selling the wife. I'm selling the kids. I'm selling everything. And I am going to load the bag up with Bitcoin if we do get to 14,000, 15,000. Because in my opinion, if we do get down there for whatever reason, just know we're never, ever, ever going to see price at that price point ever again. So I am going all in, and I'm going to go crazy, because once Bitcoin does start to fly again and we're back trading above all-time highs, I'm going to be owning an island at that point. I'm going to purchase a freaking island, and I'm going to call it Pip Island, and it's all going to be because of Bitcoin, right? But just being honest with y'all, family. So again, my sweet spot, I really like that $14,000-15,000 level. If we could see that, and that would be pretty amazing. That would be pretty amazing for sure. I see. Same. I thought even for crypto, I do see good future for it to be as currency. Which one? Don't know yet. Yep. You're not a nobody. Appreciate you. We watched you since 2020 and IML year ago. I appreciate you, CM. Thank you so much. Shout out to everybody that be showing me massive love here as well. That's been following me for a while. Right. I definitely appreciate y'all, all of y'all for sure. Because without y'all, I wouldn't be able to do this. All right. But yeah, overall, that's my thoughts, guys, on Bitcoin. You know, I do think we are going to experience some more bullishness, but overall, I think we have, you know, another move down to the downside. Just my opinion, all right? Just my opinion. Okay. But yeah, that's pretty much what I'm looking at, guys, for tonight overall. My favorite setup's probably going to be GJ. I'm going to keep my eyes on with GJ. Again, this 164 level looks pretty juicy. UJ as well. 134 looks juicy for UJ. Yeah, that's pretty much the ones I'm going to be focused on more than anything. Euro USD, if we're able to come up to this 1.036 level for Euro, then I will be looking for some shorts up in this area. Okay, so that's definitely another one I'll keep my eyes on. But if I'm going to be honest, family, like I'm probably going to go into tonight with, I don't have no trades open. I actually closed out the last of my trades earlier today. It's been a pretty decent week so far. I only traded 2 days so far this week. Let's see. Yeah, I only traded 2 days this week. It was literally pretty much just straight Euro USD buys. I kept on buying Euro USD buy opportunities. And I ended up catching out a couple good trades. You know, I'm up a little bag for the week so far. You know, close to 5K so far for the week. I wish I could show you guys, but obviously it's not going to show. But overall, it's been a very interesting week, right? So now I'm just going to be sitting on the sidelines. And I'm just going to pretty much wait and see what the market does in the morning, right? I don't think I'm going to take anything tonight. Again, I'm probably just going to sit on my hands, see how the market reacts in the morning, see what comes out GDP. And if we do get sort of like a negative reaction to what I expect, I'm going to get involved, right? Now, what I mean by that is for whatever reason, guys, if GDP actually does come out negative, right, which I expect, and for whatever reason the dollar ends up losing strength off of that, I'm taking that opportunity to go ahead and get ready to position myself to jump in, right? So if Euro USD flies off of negative data, for whatever reason, that is literally just a trap to go ahead and capture massive liquidity before they go ahead and actually send it in the real direction. So if they fly it up, if they send it higher, I'm going to be jumping into shorts all day long to go ahead and ride out, you know, pretty much the fake move that they're going to be doing. All right, so that's going to be pretty juicy. Let's see. Sell me a spot on Pip Island. I got you, Raymond, for sure. Right, everybody in the family is more than welcome to go ahead and get a position on Pip Island, and we could go ahead and pretty much just go crazy. Right, have live trade nights, have live DJ sessions, and we just go nuts. Right, I feel like Pip Island will be absolutely a vibe. Let's see. Hey, bro, good to see you. What's going on, Blurp Blurp? Shout out to you. I appreciate you for tuning in. Let's see. I'll buy property on Pip Island, right? Yeah, we're going to turn Pip Island into the #1 spot for sure. All right, let's see. What do you think about USD CAD? For sure, let me take a look at USD CAD. All right, and see what we got here. So, USD CAD just looks bearish right now. All right, it definitely looks like it wants to go ahead and start to correct a lot of this move. So, I'm going to be expecting more downside here for UCAD. But I do think that we are going to be able to start looking for some buy opportunities for UCAD, maybe down here at this level. All right, at around this 1.2622. All right, so yeah, you know, I expect more downside. Go ahead and pretty much close all this clean traffic that we have right here, this entire big push up. I think we're going to go ahead and correct majority of that. So I will be looking, guys, for some buying opportunities. Something like this. Okay. Sound like this, right? This is what I would like to see for UCAD. So overall, though, I'm expecting bearishness probably going into tonight. So going into tonight, how can we play it? Well, if the market ends up pushing up a little bit for us, then we can go ahead and look for some shorts. Okay, look at, I went from higher time frame, expecting bearishness, to now going to lower time frame and looking for an entry to actually go ahead and get involved for the shorter term trade. Shorter term, it will be looking for the pullback and then taking the sells. So if we can see price come up to say this level up here, then I like the opportunity. And this is something that you can keep your eyes on going into tonight. Right? I like the opportunity for something like this all day long. I just got to see UCAT come back up to the 1.286 level. If we can get back up to 1.286, guys, then I like that shorting opportunity for sure. All right, looking for this continuation lower for UCAT. I like that a lot. Like a lot. That one is looking very, very juicy. Very, very juicy setup right there. All right, so that's definitely a good one for USD CAD as well. Let's see, another banger session. Thanks, bro. Shout out to you, Tony. I appreciate you. Is the beat at the intro your beat? Yes, that is. Somebody had made it for me like 4 or 5 years ago, that beat. You know, that was a period in time in my life where I thought I was a rapper. Nah, I never thought I was a rapper. I just like to joke around, right? So I ended up getting a beat created, and yeah, that's the beat right there. All right, so let's see. What's your bias for gold? Again, gold we spoke about already, but I'll look at it again. All right, gold for me personally, I think that we can have some selling pressure. Like the overall bigger picture for gold is a sell from 1770s. All right, a sell from 1765, 1770s, right? That's my overall bigger picture for gold, right? Bigger perspective. Shorter term perspective now is if we pull back down, then we can look for an opportunity to go ahead and ride us up into that area that I really want to short from. So for a short-term intraday type of look, it will be looking to buy off of around 1723, 1722, right? Around that area, 1723, that's where I would like to look for some longs to go ahead and ride this thing back up to the upside. All right, so that's what I'm looking at for gold. Oh, yeah. All right, let's see. NZD Swiss. Let's take a look at NZD Swiss. Let's see. Let's see what we got here. So overall, NZD Swiss definitely is looking very bearish overall. Long term, at least. Right now, we are at an area of key structure. It looks like what we can possibly experience is the market pull back up higher. I would love to see NZD Swiss come all the way back up to this area up here of supply. And then from that area of supply, I would love to go ahead and look for some possible shorts to go ahead and continue in this little short-term bearishness that we've been experiencing. All right, so that's what I would like to see. I want to see price come up to the 0.603. I do think there's a good chance for it to do that because we've seen a very strong spike to the downside that got ultimately completely erased. And now we could experience price to go actually higher. So, yeah, selling from that supply zone up there is probably going to be the best opportunity to play. But before we even do that, we might end up looking for a buy right off of here, right, to then send us up there. Something like that, right? That could be a little outlook here for NZD Swiss. Come down to here, 0.598, buy it all the way up to 0.603, and then from there sell it all the way back down again. Okay, that looks pretty juicy for NZD Swiss. When you find a supplier demand zone like you like for a trade, how do you determine where your stop loss will be and how many pips that is? The pip is really going to depend, right? Your pip amount is always going to change in terms of stop loss, right? You could have a 5 pip stop loss, you could have a 10 pip stop loss, you could have a 100 pip stop loss, right? That's really going to be subjected to the actual setup that you're actually looking at, right? But how I like to do it is very simple. If hypothetically speaking, and I'll give you guys for both of these examples, right? If I was looking to say buy this right here, I'm going to be putting my stop loss below the entire swing low. All right, because yeah, you could look at, say, this area right here being the main point where demand started to pick up and stops go below there. But I like to give it my breathing room, right? I like to give it, enough room that's outside of the range, just in case, there are little extra liquidity grabs that the market wants to do. So I will be looking to buy right here all day long, right, at this demand zone. We know it's demand because the demand picked up. All right, stop's going to be on the outside. Now, in terms of the sell, if I was, say, looking to sell this now, all right, guess what? I'm looking at the start of my supply zone. My sell is going to be up there. My stops, again, is going to be on the outside of the range. All right, so again, entry here. Stops is going to be above the entire range, not just the actual area where price really started to pick up, but above the entire range, just to be safe. And then that's how we will pretty much set up the opportunity. All right, and how I use supply and demand zones for my entries, but also how I pretty much play my stop losses and stuff off of that as well. Let's see, Abel for Dixie, are we looking at a pullback possibly to 105.125? Let's see, for the Dixie. All right, let's see, all the way up to 105.125. I mean, I definitely expected, again, for me, I really think that we could see the dollar index at the very least come down to this 105.5 level. Right, 105.128. I see what you're looking at. It's pretty much right down here where this order block was created and where the momentum really did pick up. And yeah, there is a good chance for us to get down there. But for me, if I was sort of trading this and I was looking for the short, I would be looking to get out of any positions right here at this 105.5 just because of all the structure that we have there in the past. All right, so I would target at least down to the 105.5. With there being a chance of it going potentially lower, right? Maybe down to around the 105.2. But yeah, that 105.5 just lining up with structure is probably going to be the best bet if you are looking to target it for whatever reason. And even if you're looking to look for buys, if you're looking to look for buys, and that exact level is where we want to start looking for buys, right? Anything below that 105.5 is a great area to start looking for some longs, right? Like start to read price action once we're down below that level. Right below 105.5, like start to look for reversals, reversal patterns, reversal structure, then get in. Then you can go ahead and get yourself a nice long position. Let's see, tell something about GOLG, bro. I'm not sure what GOLG is. Let's see, I'm still trying to figure out how this fundamental works. Interest rates increase, so shouldn't the dollar be going up? Technically, yeah. Right? Technically, yeah. But you also got to understand, data is always, normally most of the time actually priced in, right? So interest rates going up today, 75 basis point, was already expected, right? We already were expecting it all the way back here, which is why the market started to price in the fact that they're going to raise rates 0.75%. So while everybody is trying to trade the actual release itself, all right, it was already in the markets, already happened. Investors already been positioned themselves way ahead of the part. Now, the only way that you could possibly say trade a news release like that is if, say, something like there was a miss in projections, right? Like if the Fed actually increased rates, by a full 100 basis points, then yeah, the dollar would have absolutely started flying already, right? It would have been skyrocketing because now the Federal Reserve did something that was quote unquote unexpected, right? Unexpected news, unexpected results brings massive volatility that normally is not priced into the markets because again, it's unexpected. But since 75 basis point was already expected, it was been priced in. So that's why we didn't see too much of a crazy reaction off of the release itself. Now, again, tomorrow with GDP is one of those things that if, depending on how we come out, though, it could really send this thing flying. So I still think we have massive upside, guys, for the dollar. It's just, God, just be patient. All right, God, just be patient and do what it does. Let's see. That was going thinking. Do you place limit orders on the zones or enter off a break of a candle or something like that? That's a great question, DP3. And it really depends, right? I do both, right? There's times where I use pending orders, like right now. If I know, like even right now for tonight, right, there's a few setups I'm going to be looking at going into tonight, and I don't trade London session, right? I'm normally sleeping. Probably within the next hour or two, I'm going to be knocked the hell out, right, in my bed, cuddled up with my wife, right, enjoying my sleep. So when I know I'm going to sleep early and I'm not going to be awake, then yeah, I use pending orders all day long, right? I use pending orders all day long. But if I wake up in the morning and my trade is still not triggered, then that's when I go ahead and pretty much just delete the pending order, and then I just actively manage or monitor the trade ideas and the trade entries, and then at that point I'll just jump in when I see what I like to see. All right, but it really does depend on both, right? Gold, but yeah, gold itself again. I said gold already, but gold I think long term we're going to be looking for some bearishness. Right, long term I'm still expecting more downside for gold. I just want to see gold possibly give us a little push higher before we start turning around. Right, so either off this 1745 or this 1765, I'm going to be looking to short gold. All right, but other than that, family, though, I appreciate you guys, family. This is going to be it for tonight. Another great freaking session. All right, again, I do this for y'all. I do try to go above and beyond with providing you guys with massive value so you guys can get this. But if you do want to actually get a lot more structure, and if you really want to take your trading up to a whole nother level, then make sure to go ahead and participate in the 5-day ProTrader Bootcamp that is coming up. I know a lot of you guys right now are probably a lot more interested in fundamental analysis now than ever. And I have a specific day in the boot camp, guys, that literally is solely all about fundamental and sentimental analysis. And I feel like that's the missing piece to the puzzle for a lot of y'all. So, again, if you guys really want to take your trading up to another level, make sure to be a part of the boot camp so that you can get all this real value, real sauce in a more structured way so that it really does start to make sense. But, family, I appreciate you guys. I love you guys. I'll be back on tomorrow, same time, same place. And I look forward to seeing y'all then. Let's get it, y'all. Have a great rest of your guys' night.
NAX.